Electric is right now reporting that Tesla might lose its $7,500 vehicle tax credit for its Model 3, and that's because not enough of its battery is apparently manufactured in North America via free trade. That article is actually right here. This is straight from Electric. And they argue here that basically Tesla has told its employees that it expects to lose the full $7,500 tax credit on the Model 3 because the batteries come from China. Since January, some electric makers have been enjoying a surge in demand thanks to a new federal tax credit program. This, by the way, will end March 31st unless you're in compliance with sort of these requirements that a certain percentage of the batteries are manufactured in North America. That could be Mexico, that could be Canada, it could be America. By the way, I have a belief in terms of why this is going on, along with some other commentary on Elon Musk. He's been a little active the last couple days on Twitter as well. But my belief regarding what's going on here is it's awfully convenient that this is happening the last week of the quarter. Now, I'm not trying to put on tinfoil hat here, but I'm also trying to think as I would if I were over at Tesla. And the reality is, I would love to argue that, hey, look, it's not us, but you've only got 7 days left to check out on that coupon code or something like that, right? That's basically what Tesla is able to achieve here. Hey, you got 7 days left if you want that $7,500 credit. Buy now, get off your butt and buy now, or sorry, you lose the tax credit. So on one hand, it helps push demand for Tesla Model 3s and possibly also other electric vehicles. But the problem is there aren't that many other electric vehicles that are available to buy. I'll give you a little anecdote here. So my one of my family members is super anti-Tesla. They refuse to buy a Tesla ever. They just don't want a Tesla. And so they're super anti-Tesla. And they've told me, hey, you know what? They're in the market for an electric vehicle, but ideally a hybrid is what they're looking for. And they're saying they pretty much can't find one. They were giving me numbers like how there are somewhere around 69 or 70, I think it was 68 Toyota dealerships in California. And over the next year, they're expected to get 180 electric vehicle or hybrid RAV4s. And I'm like, that's 2 per in the next batch for the next 6 months to a year. Who knows if that's accurate? What they're being told? Maybe that's just a way to sort of sell these hybrids. But it seems like there is a substantial amount of more demand for electric vehicles, and yet companies can't produce enough of them. So, with the exception of Tesla, which makes this article especially important because I think really what it's doing is it's trying to yell at the Biden administration and say, hey, your guys' requirements are too tough too soon. We don't have enough capacity yet across the United States to actually be able to fulfill the demand that people want. So, in other words, what would be a brilliant 4D chess move here is quote unquote leak that, oh no, get ready to tell people you're not getting the $7,500 credit anymore, which is the perfect reason to text message all the people who have been interested in Teslas and ask them, hey, are you interested in a Tesla? Because, hey, that tax credit goes away at the end of the month. See, look, it's in the press. Here's the coverage. So it's a fantastic way to get some extra sales, for the end of the quarter. But it's also a way to pressure the United States. It pressures the government in potentially saying, hey, you really ought to loosen the rules on these requirements because you didn't release guidance for this tax credit coming into effect until basically like February. And so thank you for waiving some of the requirements for the first quarter. But now people are going to be pissed and they're going to buy less electric vehicles. And after all, isn't your goal climate change and making sure we can minimize the impacts of climate change? And so if that is your goal, then get off your butt and loosen these tax credits for a little bit of time. It's also really convenient that at the same time as this is happening with these tax credits, Elon Musk happens to reply to Joe Biden bragging about green energy. So Joe Biden, here's the tweet actually, I'll just show it to you. There we go. Joe Biden writes, "In my first year in office, we protected more lands and waters than any president since JFK. We've also made the largest investments to fight climate change ever. Today, we're building on that momentum by protecting additional natural wonders." Well, what does Elon reply to this? Elon replies with, "The banks are melting." So he's basically trying to discredit Joe Biden's climate push, as obviously the president can't walk and chew gum at the same time because, well, he's old. That's somewhat of the attack here from Elon Musk. Now, don't get me wrong, big fan of Elon Musk, but it's a great opportunity to poke at the president. But then again, everybody pokes at the president, so that's no surprise. But the reality is, hey, wait a minute. The government can have a green energy policy at the same time as working to resolve a banking crisis. That's why we have a government, so they can do multiple things at a time. Now, do they do those things well? Probably not, but I believe they at least try the best that they can. So, as dysfunctional as the government can be. But anyway, at the same time as all of this is happening, I don't know why, but the drama again is circulating about Elon Musk having taken a picture. And I want to talk about Tesla margins as well really quick. But first, I just quickly want to hit it. It's circulating again, this drama that Elon Musk took a photo with basically what's deemed to be one of the potentially largest propagandists, is what she's being called, in Russian media. Here is the photo of her taking a selfie with Elon Musk at the soccer game, the World Cup. And it's really remarkable because it seems as if Elon doesn't even know with whom he's taking a picture. And so a lot of controversy was circulating around why is it possible that one of the top anchors for Russia and potentially Putin's government can just walk up and take a picture with Elon. Shouldn't Elon, with potentially the largest fleet of private satellites on Earth, be a little bit more either careful or protected, or should those around him be screened better? Who knows? Those are just ideas. I think that's really just the media professing their love for Elon. So then we got to hit margins, because there's been a lot of talk about these as well. Specifically, what's going on with China. So now there was an interesting op-ed yesterday in Bloomberg, and it talked specifically about how Tesla is really setting off this price war. And the price war in China is expected to, at least potentially, lead to a lot of bankruptcies. And so people are a little concerned about that, and because, well, people don't want car companies to go bankrupt. They want more car companies as a choice. But anyway, what are we getting? Nio, the CFO of Nio, told Bloomberg, quote, "We need to go through this price war at the beginning of the year, and then we expect the industry to go through some profound consolidation. It's almost consensus that China now has too many automakers." Now that's interesting, because this is exactly what happened back when the Model T was very popular with Ford back in the early 1900s. You ended up having dozens of different automakers, and basically all of them went bankrupt. In fact, there have only been 2 American car companies not to go bankrupt. Tesla's one of them. So Nio is basically alluding to what happened in the early 1900s as potentially happening again. Now, of course, Nio and Xpeng and BYD think they'll be able to withstand some of the additional price cuts coming and the competition coming to the Chinese market. But I find it fascinating that you've got basically Tesla leading the way of these price cuts, to where now you have other companies worried, suggesting we think a lot of car companies are going to go bankrupt. It's not ideal for consumer choice, but it is capitalism. That is what happens after all. You tend to get consolidation during rough times, during times of stress. And again, that tends to be a good thing for capitalism, because you want the best quality companies to survive. even though that may come at the expense of joblessness for some, although they'll find work somewhere else, or the loss of choice for the consumer. Now, I think the big joy over at Tesla is the ability to maintain these large margins. And these margins that Tesla has, unfortunately, are going to shrink in the case that we do end up seeing that tax credit disappear, which we probably will see that tax credit of $7,500 at least halve to $3,750 again. I think it'll make a great push for end of the quarter sales. So I actually think it's a phenomenal thing in the short term for Tesla. And I think it'll dial up enough pressure on the White House and the IRS and Treasury Department to actually probably revise or loosen their guidance again. Mostly because the country wants more electric vehicles to be bought, not less. The point of the Inflation Reduction Act isn't to punish companies, it's to get them in tune and actually start using locally produced batteries. But how do you do that when there aren't enough batteries? In fairness, there just aren't enough yet in America. While at the same time, you have a supply glut of batteries in China. That's something that is freaking out, especially the commodities people. The commodities people are losing it over lithium prices plummeting. Now, look, they're still way above where we were pre-pandemic. But I think it's very interesting because, even the New York Times is talking about these falling prices and potentially the supply glut. So take a look at this here. This was just from a couple days ago here. Lithium, the common ingredient in almost all electric batteries, has become so precious that it's often called white gold. But something surprising has happened recently. The metal's price is falling, helping make electric vehicles more affordable. Since January, lithium prices have dropped nearly 20%, according to Benchmark Materials via the New York Times here. Even as sales of electric vehicles have soared, cobalt, another important battery metal, has fallen by more than half. Copper, essential to electric motors and batteries, has slipped 18%. Now, of course, these are down off of highs, but instead what it does is it helps sort of rebuild some of the margin that you're seeing at companies. As you can see here, as essentially the commodity prices seem to almost align with the cut in prices of Tesla's 3 and the Y. By the way, it's worth noting the Model Y, which I think is the best vehicle for Tesla that anybody could buy for Tesla. I actually don't own a Model Y. I just say that having owned a Model X and S, I think they're overpriced. And then having been in a Model 3 and Y, I think for a little bit more, why would you not get the size of the Y? That's not to bag on the 3, but it's just to say that marginally I think there's an advantage to the Y over the others. Now, if you look at the delivery options, which I think is pretty interesting, if you look at the delivery options right now for Teslas, you can see the Model Y is sitting at an April to June delivery. So you have to wait at least 2 weeks for the Model Y, but potentially as long as 2.5 months. For the Model Y Performance, you're at a March to April guideline as much as you are with the Model 3. You're sitting in March to April as well. Looks like they've updated their website as well. New Model 3 and Y vehicles qualify for the electric vehicle tax credit. This is in effect before an update to federal guidance, which Treasury and IRS intend to issue no later than March 31st. So it looks here like this, to me, this is just political pressure being put on by Tesla. And it's brilliant. If I were Tesla, I would be doing the same thing. Absolutely. I think they're doing the right thing. It's a brilliant leverage tool to remind people about Tesla's, essentially their version of a coupon expiring, For electric vehicles, a major roadblock is cost. Exactly. And this New York Times article, the White House is reading the New York Times. This just helps Tesla as well. Falling price of EVs or lithium is going to help promote EV sales. Price could fall potentially much further because demand for the metal has not risen as some as people expected. By the way, I will say that's one of the reasons I personally don't invest in commodities, is commodities are very heavily based on speculation of what could happen. That's my opinion, okay? I'm not trying to offend the commodity buffs. I think commodities are extremely important. I just think the price of commodities is usually so highly speculated on that it's very difficult to actually get a commodity at a sort of a value price or a fair price, so to speak. mostly because you tend to buy into these run-up hype cycles of commodities, and then they crash as demand starts waning and people get fearful. Anyway, some analysts suggest this was caused by slowing growth of electric vehicles in Europe and China after subsidies expired, but other industry experts say the drop suggested that new mines and processing plants were solving lithium problems sooner than many analysts had thought possible. That's another thing. When commodities are very expensive, what happens? You have to think from a capitalistic point of view. What happens when a commodity gets really expensive? Guess what? We end up inventing a new technology to end up extracting and refining that material faster and better and at higher quantities than we had ever thought possible before. I mean, I remember being a child and thinking, well, I still am, but I remember thinking about, oh no, we're going to run out of oil by the time I'm 55, because I remember being a little 5 and 6 year old, oh no, no more oil, you know, or it probably sounded more like, kein mehr oil. But anyway, I remember that being a fear as I was growing up, even in first and second grade, being 7 and 8. Oh no, we're going to run out of oil. And what happened in the 2000s? Oh wow, look at all this cool fracking technology we got. Oh wow, the US is actually turning into a major oil producer in the 2010s. Oh wow, the ability of us fracking doubled between 2008 and 2019, and our output doubled. Wow, look at that. The same thing just happens over and over again with commodities. And you don't have to actually really be an investor in commodities to see that happen. You just have to be a student of history. But anyway, even after falling so much, lithium prices remain so high that mining and processing the metal is usually unprofitable. The metal, uniquely suited for batteries because of its ability to store energy, costs $5,000 to $8,000 per ton to produce. It sells for 10 times that amount. So this is where Elon Musk has regularly come on and said, come on to interviews or earnings calls and said, hey, if you want to print money, get into lithium. Given those fat margins, investors and banks are eager to invest in or lend against mining or processing facilities. You can't have profit margins that are 10x what it costs to extract. This is true. It's going to compress at some point because more people are going to enter the industry. Completely agree. But others, including members of the Biden admin, are less confident. The supply of lithium has to increase 42-fold by 2050 to support a transition to clean energy. We have to find additional sources of supply. But what's interesting is there's this argument that there's not enough, yet, Elon regularly says there's plenty of lithium. It's everywhere. It's just a matter of extracting it. Oh, how convenient. Look at this. There's plenty of lithium in the world, but it was not considered very valuable until sales of EVs began to take off in the last few years. The mining is not what's driving the costs. It's the availability of processing facilities. So need more of those. Most refiners are in China, and few managers and engineers outside the country know how to build processing plants. So see, now it's a knowledge gap, but I mean, that'll fill. I mean, we've got ChatGPT, how to build a lithium processing facility. Supplies of lithium and other critical materials are a national security issue. Last year, the administration established the Mineral Security Partnership, a group that includes the EU and 12 industrialized nations, to locate mining opportunities and finance them. The Energy Department is doling out $3 billion in grants to create a domestic battery supply chain. In addition to the Inflation Reduction Act, which Biden signed into law last year, provides tax credits for battery production. Fascinating. What do we got over here? We got people what look like digging for cobalt, which is also not so ideal because of child labor concerns in parts of Africa. But anyway here, American battery technology attributed the recent decline in lithium prices to temporary factors like that's not good. Hold on a sec if you could still hear me. Turn on office. Idiot. Sorry. I'll be right back. It appears you can still hear me, you just can't see me. Anyway. So, what else here? There was a time when people believed electric vehicles would grow very rapidly. Then the reality of how fast they were actually growing caught up. Expects lithium prices to fluctuate. All right, whatever. So these investments could turn out to be money losers if lithium prices fall. Yeah, that's the other thing. Is so many people end up flocking into these commodity projects that at some point we'll end up with a glut of production. I'm really not concerned about running out of lithium. I really think it's nonsense, and it's all fear-mongering, mostly because of my belief of what happened with oil, but also what you tend to see with other commodities that tend to be very important. There are also other batteries that are, end up being developed. I mean, there are, I want to say, sulfide carbide batteries being produced. Obviously, solid-state batteries could potentially not use lithium. So there are various ways to get around these lithium iron phosphate batteries that are manufactured in China right now, mostly in China, specifically in partnership with CATL. Oh, how convenient! Look at this. That helps supply Tesla's vehicles, or their manufacturing process. But look at this. China's lithium iron phosphate battery cathode material capacity glut will surface in 23 to 24? Question mark. And you got a little picture here of the CATL batteries. China has been the most aggressive in the world. Oh, it's behind a paywall. What a bummer. But anyway, there's been regular talk about this glut of supply, specifically over at CATL, mostly because EV demand has slowed down in China. And now, fortunately, there's a lot of competition, and Tesla's vehicle registrations, from an insurance point of view, are doing phenomenally. Fantastic growth year over year so far into the first quarter here of 2023. Let's take a look at this here. Let's see. Lithium and nickel miners are taking on additional costs to produce more refined products. The race to obtain battery material has intensified. Market dynamics have changed. However, heightened competition is coming as prices for the raw materials weaken amid concerns that supply shortages could actually give way to gluts. Lithium has fallen. Obviously, it's still trading higher than where it was pre-pandemic and a lot of the EV rushes. But these lower commodity prices are a fantastic thing. Now, Kathy Wood said on CNBC yesterday, or maybe it was the day before yesterday, that she believes it was the commodity price cuts that are actually what are leading to Tesla's essential price cuts. I don't think that's true just yet. I actually think that Tesla and their margins are likely to get hit before those lithium prices or commodity prices come through. Now, Tesla generally doesn't hedge that much against its commodity prices. However, some of its items are entered into contract, so you could end up, and we're not exactly sure which ones, but some of them, for example, you might just buy regularly, like copper. You might just pay spot for it anytime you need it. And something else like lithium, you might pay contract for. Now, if you do lithium in a contract, you might end up having higher prices for longer. And that can hit Tesla's margins for a little bit. So I do worry that if we hop into the margins for Tesla and projections for Tesla, we could end up seeing their margins suffer for at least the first 1 to 2 quarters of 2023 here. And now, I think that if we look at 2023 and the projections, at least Tesla in their last earnings call gave us a little bit of a heads up that we could approach 20% as a gross margin well before we end up hitting 30% again. That's going to hit some of the numbers for Tesla, and I do believe that the market is not fully pricing that in. So I think there's a chance that could create a little bit of a buying opportunity, but we'll end up seeing. Now, then you've got some articles here also talking about this sort of expansion here of additional planned lithium output or capacity. All of this really contributing to the idea that we're going to see continued gluts of lithium. Now, it's also interesting that it looks like BYD, according to Bloomberg, is, quote, capable of carrying out another round of cuts. It looks like Bloomberg's actually citing a few analysts from Morgan Stanley who wrote on March 9th that the price war that was initiated by Tesla might come on faster and more severely than expected, as we expect a market reshuffle. They suggest that Nio, Xpeng, and Li Auto have strong enough balance sheets to stay self-financed for at least 18 months, but that the price war is coming. Well, okay. So we'll see. But this idea that many of these competing companies will end up going bankrupt, I actually think will lead to a large consolidation in the electric vehicle industry. And you'll end up coming out of this recession much stronger as a company that survives. That's not going to be everybody, right? But let's say, hopefully, knock on wood, someone like Tesla and BYD survives. They'll have killed off a lot of the other competition, or they'll certainly during the recession have slowed a lot of the competition. Like even GM and Ford, they don't even expect to be profitable. Well, certainly Ford. We haven't gotten disclosed financials from GM on this, but we don't expect Ford to be profitable on electric vehicles until 2026. Toyota doesn't expect to introduce fully electric vehicles or a larger line because they've got some already. But in more mass scale and more lines, they don't actually expect to introduce electric vehicles broadly until 2026. It's kind of wild. But anyway, this gives us some insight into Tesla, which is pretty useful. Now, some people say like, oh, but aren't Li and Xpeng backed by CCP, the CCP like Nio? Well, I mean, if you look at a company like Nio, yeah, there's a local government that owns some of Nio. So, of course, there's this incentive to prop up potentially these local businesses. And it's not to say that China won't prop up those local businesses. But I think this argument that China wants to somehow punish Tesla because it's American is actually quite nonsensical. Because if you read Chinese news, which is mostly propaganda, but then again, a lot of our news is probably propaganda as well. But anyway, if you read into some of the Chinese news, like the South Morning China Post, that's one that I like to read. You actually find so many compliments for Tesla from China. And I think the reason that you do is specifically because China wants to promote the idea that manufacturing in China is a good thing, that you shouldn't go to Taiwan, that you should end up staying in China because we helped the most productive facility for China come into existence, Giga Shanghai. And so, yes, there's a price war, and that is going to extend. But oh, that's an interesting sound. I'm getting a little ad here on the South China Morning Post. But anyway, they argue here, electric cars, one of the few fast-growing sectors, will be less of a growth driver for auto sales in China this year because of shrinking fiscal revenue, making it difficult for the government to extend subsidies on purchases. New EVs will be less supportive of sales growth this year. And there's been no indication that there will be a renewal of cash subsidies. So that's also helped lead to some form of a glut in lithium. But then also you have macro factors. I mean, just the fact that we're walking into a recession. But I think it's very interesting that when you look at China from sort of a propaganda point of view, what would they rather do? Would they rather slam on China or slam on Tesla, or promote Tesla as basically their love child? Their foreign love child. Please come manufacture more with us. That's my take. I mean, it makes logical sense to me, but then again, logic doesn't always enter into the equation of what happens in geopolitics. But I do think that's something strong to consider. See, look at this. Yeah, here, I found it. There we go. So look at this. This, I think, was interesting. China outgoing premier vows even greater business opportunities for foreign investments. Analysts say that attracting more foreign investment, especially from the US and Europe, could help curb decoupling, but restoring positive business sentiment cannot be done overnight. While acknowledging the external demand, that external demand will be relatively weak this year, Beijing is sending strong signals that it intends to better integrate global trade, while vowing China's appeal to foreign investors, vowing to enhance, that is. Leadership has also set its sight on the Comprehensive Progressive Agreement for Trans-Pacific Partnership, a high-end trade and investment pact in line with efforts, blah, 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 blah. National People's Congress reiterated this. Okay, fantastic. Look at this right here. Zhang and this other person have a directive to facilitate the launch of landmark foreign-funded projects. That's the goal of China, right? And right here it then says, call to mind what happened with Shanghai with the Tesla Gigafactory, which was one of their major achievements, China's major achievements during their term in Shanghai, or the mayor's term over here in Shanghai. Whether more projects like this will be added or launched is something we should look forward to. So I find that very interesting. You know, to me, I think that's a fantastic way of saying, hey, we're in a position where investing in China is actually a good thing, and China wants to keep that investment going. Of course, we're facing a pretty large macro recession, a banking crisis at the same time. You know, you've got some multiple worldwide disasters, but I think it bodes well for Tesla, because if China is trying to prop everyone up and attract more investment, if commodity prices are falling for whatever reason, and it's likely that other automakers are going to go bankrupt, well, that ends up being a boon for Tesla as a survivor. That is, if they survive. Anyway, we could talk about that in the courses on building your wealth, link down below. Changing the pricing after this live stream. All right, here's a piece that was just posted on Ford. Ford's EV business lost $2 billion in 2022, offset by big profits in fleet and legacy units. Ford says Thursday its electric vehicle business lost $2.1 billion in 2022 on an operating basis. Oh, good Lord. That loss was more than offset by a $10 billion operating profit between its ICE and fleet business. Now that's your regular gas guzzler, and then fleet, of course, would be like its transit line and commercial van lines. So Ford said Thursday its EV business lost $2.1 billion. The Detroit automaker expects 2023 to unfold along similar lines, forecasting a $3 billion loss for its electric vehicle unit, adjusted earnings of about $7 billion for its ICE unit, and adjusted earnings of about $6 billion for its fleet business. The financials are the first look at a unit profitability as Tesla unveils a new financial report, or as Ford unveils a new financial reporting structure aimed to give Wall Street a better understanding of how its EV business is evolving. The reformatted reports follow sweeping reorganization, separating Ford into 5 businesses. Ford Blue, its traditional ICE engine business. Ford E, the electric vehicle business. Ford Pro for commercial and government. Ford Next, which includes non-automotive mobility solutions and other future tech. Okay. And Ford Credit. My gosh. We've essentially refounded Ford. This is a joke. I mean, basically what they've done is they've now separated the money loser from the profitable business. And what's going to happen is they'll probably just keep milking the profitable businesses until those go bankrupt. And then the hope is that they could be profitable on electric vehicles before they go bankrupt on their legacy business. Because if they go BK on the legacy business because everybody goes to EVs, they're going to have a little oopsie-doopsie problem trying to transition. So the goal is, how can you become profitable on EVs before you go bankrupt on gas vehicles? And hopefully there's not too big of a gap, because if you go bankrupt first and you're still not profitable on EVs, or you haven't gotten them to scale, then you're going to go bankrupt here too. So I don't know. It's going to be very interesting.